Welcome to In It to Win It. This is Steve Barton, and thank you for tuning in. We're here for Monday market moves, what happened last week in the markets, and what I expect for next week. Alrighty, let's go to the charts. Starting out as always with the S&P 500. So this one rolled over. I really thought that we were going to hit new all-time highs and then roll over. We didn't. We just came just shy of that and then rolled over. Anyways, down 4.25% from last week. Some support around now. If I go to the weekly here, we're hitting right on the 20 weekly, which isn't a huge level of support. We got the 100 right below us right now. And then after that, I see some support around 51.80 or so, which would line up with a little bit of back support here. And more importantly, the rising 200 moving average. Now, one of the reasons it rolled over, NVIDIA has just absolutely tanked this week, down 13.8%, and a lot of the other tech stocks as well. I'm starting to think that we're finally right about the tech sector. We're making lower highs as we go here in NVIDIA. So I would expect it to come back down, probably hit the 200 moving average and then go up, but not quite as high as it did before, and just continue that trend down. The dollar had a little bounce, so we're up here and then came right back down to this lower part of the purple box, which is acting as a huge level of support down here, and then bounced right up with a pretty strong wick. So I would, my bias is to the upside for next week for the dollar, which probably will not be good for commodities. As the dollar gets stronger, then it takes fewer of those dollars to buy the same commodity. Another thing that's unwinding here is the Japanese yen carry trade. So as this chart goes down, the Japanese yen is getting stronger in relation to the dollar. This last week, it gained 2.5% on the USD. Another reason for the market, I believe, taking a big hit is we finally had a confirmed weekly close of the 10-year yield minus the 2-year yield. So we've been looking at the zero line for like more than 2 years. It's finally broken up. Now, if I go to the weekly here, we got some pretty strong resistance here on the 200 moving downward sloping 200 moving average on the weekly. I'd expect it to hit somewhere around there and then probably come back down. But there's quite a bit of support below it and then some resistance above it. I would expect it to trade kind of up and down in between here, but then eventually move on up and confirm the recession. 1 month treasury is finally breaking down after well over a year of trading, around 5.3, 5.4%. Closed the week at 5.15%. So you're getting less money on your cash. Yeah, as far as macro, we had a really interesting macro discussion with Joel Littman over at the Rural Classroom Plus. And Joel basically gave his view on what's going to happen with the coming election and how to make money from it. We got to take the hand we're dealt, and one of these two is very likely going to be our next leader. And depending on the policies that they put in place, so basically Team Blue wants to put in policies to tax unrealized gains. Basically, gains that you make in the stock market, they want to tax that even if you haven't sold it. What implications lie with that? They also want to do like 1970s style price controls, which we know from history. If you look over Diocletian in the Roman Empire, you look over the French Revolution, Spain in the 16th and 17th century. More recently would be, the 1930s in the US, 1966 in the UK, and even more recently, the 1970s in the US under the Nixon administration, and we know how that works out. So that's Team Blue's plan. Team Red's plan is to tax imports. So imagine taxing everything on Amazon that comes from China. Imagine China right now is producing EV cars for as low as 10 grand a vehicle. Imagine if they put a tax on that, so it wouldn't be available to us Americans unless we paid 20 grand, so the extra 10 grand goes to the US so we can keep this thing running. So basically, under both scenarios, you have higher inflation, and Joel gives an amazing presentation on this, pretty sobering, honestly, and that's in the pinned comment below. Check it out. Got to take the hand you're dealt. You might as well make money from it. So one way we could make money from this, gold, I think no matter who wins, this is probably going to do quite well. My prediction, and I don't know, but I think if Team Blue wins, gold will have more upside. If Team Red wins, I think gold will have amazing upside, but just not quite as much as Team Blue. Maybe I'm wrong. I don't know. Oh, side note, I did reach out to the leading candidate for Team Yellow and Chase Oliver, and I left a voicemail and an email. Hopefully he gets back to me and we could get him on the show. I think that would be amazing to interview the leading libertarian. All right, gold has gone down, what is that, 0.1%, closed the week at 25.24. We'll call it 25.25 rounding up. Really overbought, very high in all the RSI across multiple time frames, including going out to the quarterly. I would be shocked if we don't get a small pullback here in gold over the coming weeks. I'm thinking probably 3 to 4 weeks. We're probably going to have a little bit of sell-off here in gold. Another thing to look at here is the RSI. See how this is slightly angled down like that? Usually when you get that and then you get a drop below this yellow line here, they're probably going to have some more selling pressure. There's a lot of shorts by the banks here who are buying most of this stuff. And so I see increased weakness in the gold market in the next few weeks. Gold divided by the S&P 500. Gold did outperform the S&P 500 this week by about 4.3%. So close the week at 0.467. We needed to get above and have a weekly close above 0.50 to the point where 2 gold coins would buy 1 share of the S&P 500. And then we go off into never land. GDX divided by gold. The miners underperformed the metal itself by 5.8%. I don't know that this trend line really means much right now. I think it was a little bit stronger when it was up like that, but yeah, I should probably just delete that. But anyways, miners are underperforming the metal itself. Hopefully it gets scooped up by this 200-day moving average. CEF, our favorite way to play physical gold and silver in the stock market, is down 1.3%. Maybe an entry point now. I would want to wait for, I think gold's going to get sold off a little bit. So I look at a nice entry point down here around 21.75 for CEF. GDX lost 6% this week. I like support a lot around 33, 32, somewhere in that range. That might line up nice with this rising 200-day moving average. RSI isn't down low enough yet. It's at 41. GDXJ is down 7.3%, which is what we'd expect. The juniors should underperform when gold is going down, and we're having a market correction, and it did just that. I like support right around 41 or so, which would also line up nicely with this rising 200 moving average. RSI is 38. Anything 30 or below is generally oversold. Franco Nevada is down 3.5%. Still really like this support down here around 115. Maybe you catch it here on the 200 moving average at 117, and then another one down here, 115, 114. Wheaton Precious Metals down 6.5%. Yeah, like this support down here. A lot of similarities with these charts, right? Rising 200-day moving average and a lot of support right around down in here, like it right around like $51, $52. Gold Royalty Corporation down 7.6%. I think we got some pretty nice technical support right now. Made 2 purchases on here. Closed the week at 121. I got it at 124.5. But check this out, hitting right back here, right here, what it did August 5th, and then just again it did it yesterday. Or I'm sorry, today. I'm recording on Friday. So made another purchase in Gold Royalty Corporation. Some of the profits that I made from GDX and GDXJ, I rolled them into that. And EMX Royalty. Okay, can't help but notice this double bottom. We had this gap back here that got filled. I think this is a pretty decent entry point for EMX if you're a cheapskate like myself and you want to get in a stink bid. I like a stink bid down here around, I don't know, $1.45 to $1.50, somewhere in that range. Origin Royalties is down 9.5%. This is looking fantastic. I say 9.5% down and it's looking fantastic. I think anywhere along this white trend line right here would be a great buying opportunity. I think this is going to continue to grow, and our upside target on this is $1.33 a share. We still got a ways to go. Barrick Gold down 5.9% for the week. I like limit orders down around here, around this rising 200-day moving average, somewhere around $17, maybe $17.50 by the time it gets there. Stink bids down here around $16.25. Newmont down 5.7% for the week. Got quite a bit of support right here around $45. I think that's going to be, you could catch this 50 moving average, but if gold rolls over like I think it will, I think this will get slightly cheaper. I really debated selling these three majors, not all of them, but trimming 10% or so right there. Talked about it last week and the week before. Didn't end up doing it. I'm just going to keep them. Selling on breakouts and cup and handle patterns is probably a mistake. So I'm just going to ride this one out, not mess up the dividends. But if you're new to gold and you want to get into this one, I think a limit order around 44 or 45 bucks is a decent entry point for Newmont. Agnico Eagle, same kind of thing, down 2.3%. Got really stretched technicals. First level blip here is going to be like 75 bucks on that 50 moving average. I don't think I would touch that yet. I want to see gold roll over even more. First level, I think, is going to be down here around 70 bucks. And B2 Gold, get a lot of questions on this one. This one's down 5.4% for the week. I still really like an entry around $2.50, although I got to say this upward channel trend line right here has hit 1, 2, 3 with this anomaly down here for a week, and then 4. So kind of compelling entry point there. I think they'll do well. I don't own them, but I probably should. And G Mining Ventures. Okay, so exactly what we're hoping would happen has happened. The warrants are expiring here now, and I think like mid-September, so basically in another week or so. So this one's come right down here to the 200-day moving average, down 8.2% for the week. What's it look like on the weekly here? We could have a little more downside here to the 50 weekly around $5.40, but I think it's a deal now. And I'd be watching this on Monday for a bounce right here on the 200 moving average. And this is Rio 2. So these guys should be starting construction soon here in the fall. When I interviewed Alex Black, he said that if they could get all their financing, then they will be starting construction in, he said, September. That's when the weather gets to where they can actually build. So as long as they got the money, they should be starting construction here soon. And according to Lobo Tigre, you want to be buying these miners these developers, I guess, when they start construction, and then selling at first pour, and your average is about a double. So I think we're getting close. And silver is down 3.2%, still above this 200-day moving average. Now, I drew this little trend line right here. Can't rely on it too much, I don't think, because we only have 3 points where it hits. So back here, February 2024 and end of February. And then again right here in the beginning of August. We'll see if it holds above that. That'll be around $27.50, which lines up with some back support back there. But the real one we want to stay above is $26. And we have the 200-day rising moving average above that, so looking really good for silver. The gold to silver ratio getting historically high here. We are at 89.5 to 1, so silver is very cheap compared to gold. I think this is going to get a little bit cheaper, probably up into the low 90s here before it reverses. And AMP says, Steve, WTH is going on with First Majestic stock. It's back to $4.59 today. This stock has been in a downtrend for 2 years now. They just spent $970 million on another silver company. Yeah, they acquired Gato Silver, and they haven't been turning profits for a long time with what they already have, silver near 30 and First Majestic in the tank. Yes, you're right, sir. Usually, especially when they acquire companies like this, that typically tends to happen. The people that were holding Gato Silver were probably waiting on the moment when it got acquired, and that's happened. So they were gifted First Majestic Silver stock, and they promptly sold it for a nice gain for them. As far as an entry into this, maybe around now or a stink, there's probably going to be more selling pressure. Maybe down here for like touching back on this, like $4.25. The reason I own this is because it has a cult following, and maybe I should have followed Rick Rule's advice. He talked about this 2 years ago on my show many times, and he says it's all based on Jarrett Canyon. I asked Keith Neumeyer about this at the Rule Symposium. I did an interview on it. If you guys want to look through the silver interviews, you'll find it in there. And he basically said that, you know, he made a mistake with Jarrett Canyon. He said what we should have done was just gone in there, shut the mine down, and started drilling it out. And he said instead what we did was he kept the mine on. We didn't want to be that company that came in and just let go hundreds of employees. You know, we thought it'd be really bad for the press, you know, which it probably would have at the time, but hindsight's 2020, and you can't change the past. So I don't know. That's the reason I'm in this one. I mean, it's the first one that comes up on a Google search, but you know, you're probably right. You know, this is either a buy more or a sell, and it's not looking good. But it does have some nice back support back here around $4.25 or so, $4.50, something like that. All right, SILJ. Okay, now look at all the possible setups here with silver. It's going to look kind of like gold. Okay, so we got rising 200-day moving average right here on SILJ, getting lowish RSI, 34. Coming back down to here, down 9.6% for the week, but possible setup here. We got the rising 200-day moving average, and on the weekly, we got the 50 moving average, which is right around that same point. Okay, then we go to Pan American Silver, rising 200-day moving average, right? Same setup. Go to the weekly here, we got the rising 50-day moving average, right? Okay, then we go down here to SILV, Silvercrest, hitting right on the 200-day moving average, low RSI, and then we go to the weekly, same setup, right? So then we go down here to Endeavor Silver, rising 200-day moving average, okay? Then we go to the weekly here, 50 moving average right underneath it. I'm not sure, okay, let me caveat this here before I go too much further. If silver here goes down, none of those things are going to matter. All these stocks are going to get hit because the underlying commodity that they're pulling out of the ground is worth less, and they sell it for less, and their margins go in the toilet. However, that is a pretty compelling setup here for the silver charts. Joe brought up a point about right here. If we go to Pan American Silver, and you can pretty much trace these across all of them. If you go to the beginning of May here, you might have a pretty dirty head and shoulders pattern. Okay, so head and shoulders is usually a bearish pattern that works out to the downside. Maybe I'm just too much of a kind of perfectionist with these charts, but I really like to see head and shoulder patterns that this part of the shoulder right here doesn't go below where the previous one was. But, you know, maybe this is a valid pattern. You might have a valid point, but I do see more downside for silver here coming into the next week, and hence the equities. And copper, paging Dr. Copper, is down 3.3% for the week. I wrote in here a cute little thing. I watched an interview by Gareth Soloway, an awesome technical analyst, and he said something a little concerning because we have some bets on copper here. He drew the same lines I got here, and he thinks that there's a 70% chance that this breaks below here. And he's going a lot on the coming recession, the yield curve inversion, the economy. And I equate that to like up here above this trend line is ace jack offsuit, which against queen is only 30%. So he thinks 70% of the time we're going to blow through this. That's like you moving all in and then someone calling with queens and you have ace jack off suit. Not going to have a great time most of the time when that happens. So maybe we do got a lot more downside in copper. That's why I really like having a position of cash, 15, 20, 25%, so that if this actually gets rolled off and sold, we have the cash to deploy to take advantage of it. COPX down 11%. Still liking this white trend line right here. We moved it down to around 37.75, 37.50, somewhere in that range. We'll see if it actually hits. That would hit right back here where we bought before, creating like a little double bottom. But if copper gets hit, this is going to blow through that. COPJ. Okay, we've got a limit order in down here this time for sure at 1950. Getting very close to it, although it's underneath the 200 moving average, which isn't fantastic. We would have loved to see it stick that and then move up, but it did not. So I might actually lower this a little bit. See, we got a little gap back here, and usually those gaps get filled. Although this market cap is so small, it probably doesn't matter. Yeah, like this one a lot as far as a very leveraged play on copper. And even more leverage play on copper is Arizona Metals. And that is down 8.1% for the week. Still got a limit order in down here for 121. We're within like 8 cents of that thing hitting. Hopefully it does. We'll see. I would like more. And Maduro Capital, a very leveraged play to copper, porphyries deposit. And yeah, it's still trading in kind of this megaphone pattern. We're above the 200-day moving average. Like this one a lot for a leveraged play on copper. And uranium up 0.5% for the week, still holding right around this $80 level or within pennies of it. And Lobo Tigre has put out a new article. He calls it Uranium, an AI play. He says it's estimated that data centers, AI, and the cryptocurrency industry used 460,000 gigawatt hours of electric power in 2022. The International Energy Agency, the IEA, projects those sectors could use 1 million gigawatt hours per year by 2026. Now, for reference, the U.S. currently has 94 nuclear reactors that generate about 778,000 gigawatts of electric power per year. So, if this is right, in a couple of years, all the nuclear reactors in the United States will not be able to handle the cryptocurrency industry and the data centers. Pretty incredible. They're going to need more uranium, and that is what we're betting on. Check out this article. I put the link in the notes below. It is well worth a read. All right, and the Sprott Physical Uranium Trust has gone down 7.9%. Now, this is another moment in time. I should have got some just before the market closed. I didn't. I already have so much uranium, and I'm up a lot. It doesn't look like it from these last arrows, but I bought so much back here that we are way in the black. I like this bet a lot. Now, check this out. Okay, so for the week, uranium is up. The spot price of uranium is up 50 cents, and the Sprott Physical Uranium Trust is down almost 8. So still 65.5 million pounds of uranium sitting in a warehouse. It's now at north of a 14% discount. So the juicy discount is back. If this is still around here or lower on Monday, I think it's a screaming deal. And Cameco is down 9.5%, coming up on a little double bottom right here, and then it reversed back up. David Oakes says, I only follow Cameco because I see it as bellwether. Today it hit $36 a share. Yes, it did. I planned to buy at 36 because I felt like that was a more than fair price for the asset. It's hard for me to imagine it going lower, but the charts. I just couldn't pull the trigger. I recovered a bit at the end of the day. It recovered a bit at the end of the day, but on very low volume. To me, it looks like more pain to come, at least until September spot comes out and hopefully gives us some catalyst to the upside. Please, someone tell me we're at the bottom. Well, David, you probably don't want to hear this. I think we might have a little bit more weakness. I think especially with the stock market rolling over, these things are stocks, and the baby gets thrown out with the bathwater. And I don't think this is any different. Usually, whatever the S&P 500 does, these stocks do at an exaggerated rate. But I don't know, man. At some point, I look at this as like, it's like Rick says, at some point, it's cheap enough. And that's kind of compelling. I mean, if you believe in this and you have a 3 to 5 year time frame, I think it's a no-brainer. Kazatomprom, basically flat for the week. So all the other equities are down except for this one. Just riding this 400-day moving average right here, just kind of staying at the lower end of this box. If you want a position in the biggest uranium miner on the planet, I think now is a pretty good time, and it has been for the last several weeks. URA down 10.5%. Okay, also looking good here. A lot of these stocks are going to look the same. They got this nice double bottom coming up right here. It was a pretty good price to get this, I think, is around 25 bucks, and now we're at 23.18. So liking that. URNM, all right, putting my money where the mouth is. Got more URNM, hit the limit order at 38.25, and it got down even lower. I wish I would have put it down at 37 because that would have hit, but I'm not psychic. But yeah, I'm liking this entry here. Nice double bottom with a reversal bar up. RSI is 32. URNJ also bought some more of that. Liked it around 20 bucks. Now it's at 16.83 is what it closed for the week. Lining up with a lot of back support right back here. I think that's a decent entry. RSI is 30, what is that, 31? This is URNM divided by uranium itself, getting extremely cheap. So the equities are priced back here like they were in October of 2020, as far as comparing it to the metal itself. And then we go to URNJ, the juniors divided by the metal itself, also historically cheap. URNJ, the juniors divided by Kazatomprom, Cameco, and the Sprott Physical Uranium Trust, and this ratio has never, ever been lower. We had this trend line drawn that just didn't mean anything. It blew right through that. And basically, it's a game of like, do you catch the falling knife? Is that what you do? I suppose I'm trying. Uroi is down 11.5% for the week, coming into some really nice back support right back here. So I'm getting fairly interested in uranium again, and have been for the last month or two, and might be putting, we are putting some more money into work, and uranium royalty, this is my favorite one out of all the uranium plays. Some people watch the Qs, we watch the Us, another little double bottom right here. We had an option on this that we should have just sold right here, but instead it looks like this thing's going to expire worthless. I really thought that uranium would have had the spike back up before now, but I think with the incoming recession, that may be kicked out a little bit further. The U's are down 12.5% for the week, and I think the winner, if there's a bigger one, let me know, is UEC. Is down 18.5%, looking like we got some support just like the others right now, although the RSI is at 34, which is low. When you go through all of these, like if I go through the 30-minute, the only thing that makes me think that we might be on a little bit of an uptick here is you can see towards the second half of the day, it did shoot up for a little double bounce there, and it hit right back here at that same previous price point. So we'll see if these play out. Honestly, I think there's probably a little bit more downside. We're going to get Justin Hune back on the show in, a week, and we will pick his brain on this sector and find out what he learned in the WNA conference. So this, I think, sums up the uranium play quite well, and this was a tweet by Nostradamus. And this is us betting on uranium. One guy standing in the middle saying, yes, you all are wrong. That's about what it feels like right now. We'll see if that's true or not. But I think uranium is getting to be quite attractive in price again, and I've been buying. Okay, crude oil is down 8%. Okay, so we're getting on some serious support right back here at around $67, $68. We can see there's quite a bit of price action right back here around that level. And we do have some more downside, I think, that is probably going to hit maybe around like 64, 65 is going to be the next level of support. Looking on the charts, it looks like we'll go there, although RSI is getting pretty low. It's at 33. Gold divided by crude oil, it now takes 37 barrels of oil to buy 1 ounce of gold. So gold is outperforming oil. And XLE, our favorite oil ETF, has just come into the final, well, not the final, the third buy point here. Love this a lot. $86.25. So I know you guys have had this limit order in for like ever since we started talking about these 4 levels back here in May, and it finally hit for a double bottom. Like that entry a lot. Last and final one is going to be down here at 79.75. These are the corresponding dividend amounts. Exxon Mobil, so maybe that was a bear flag and we finally broken out to the downside. I would like to see it. If it bounces on this 200-day moving average, I think I'm going to have to fire another bet here. That'd be around 110, 111. When I put this limit order in back here, that's where the 200 moving average was at 109.50. I think I need to bump that up to like 111. But would like to see it bounce off this 200 moving average and then go back up. This one's down 4.5% for the week. Chevron down even more, 6.4% for the week. I think this is a pretty decent entry point. We got some back support back here, although it blew past the previous back support of around 141. So we might have a little bit more downside to like 133. But again, sometimes things are cheap enough. You know, I mean, these oil companies are going to be absolutely printing money. You know, they're profitable at $50 to $55 a barrel, and we're still at 67. Blackstone Minerals, our favorite oil royalty play. At current price point, you are higher than a 10.5% dividend. So every quarter when these dividends come in, I mean, it is pretty incredible how much you get paid on this thing. I like this one a lot. And yeah, I mean, I have so much of it, I don't think I really need more, but I don't know. If it gets down below 14 bucks, I'll probably have to buy more. And freehold royalties for our Canadians north of the border, down 5% for the week. We are currently at a 8% dividend with this share price. So like this one a lot. Pays you 9 cents a month, and it just keeps going. Natural gas is, where are we? Oh, sorry. Natural gas closed the week at $2.27 for the week, up 7%. Kind of hitting right on this 200 moving average right here. It looks like it ticked up just above it. So we do unfortunately have what they call a death cross. This 50 moving average moving down below the 200 moving average. But we've got a rising RSI. Bias for next week is to the upside. And Neil says, Steve, you mentioned the 200-day moving average a few times. Do you think it's a valid measurement of when to buy the stock, apart from any other technical analysis, just the equity being at the 200 moving average or below? Thanks. Okay, I've been getting a lot of questions on this, not necessarily the 200 moving average, but just a lot of technical stuff. If you think that would be valuable to you guys for me to set aside, I'd probably have to forego an interview 1 week to do it. But I could come up with a, I don't know, 20 or 30 minute episode on different technical things that I look for, you know, like head and shoulder patterns, cup and handles, moving averages, RSI, MACD, stochastic, stuff like that. If you guys would like to see that, put that down in the comments below, and I'll set aside some time to do it. All right, Devon Energy down 7.7% for the week. Like this one a lot. They pay a great dividend. They got a dividend coming up here September. The ex-dividend date is September 13th. So if you get in now, you'll get that dividend. That would be like getting the stock price at 44 cents cheaper, because you'll get paid shortly after. Coming into a double bottom right here, like a lot of back support right back here. Equitable, this one is down 3.4%. We got some possible long-term bullish news, really long-term. There's some proposed data centers that are going in around where they operate. So they're going to need to power those data centers somehow, possibly using natural gas. And why not pick the company that's located right next to them? And they're not going to be selling it to those power plants for $2 a million BTUs. I could tell you that. Woodside Energy. Oh man, this was just disheartening. Okay, I think we've entered the point to where this is either just a sell or buy more. We got a dividend here, but nowhere near as much as it fell. Fell 13.3% for the week. This thing just keeps going from bad to worse. I don't know. Tell me what you guys think of Woodside Energy. I'm just not really feeling it. I think we might be done. Birchcliff. Okay, this one's looking exciting. This one's down 5.2% for the week. Got a little bit of back support right back here. Got our limit order in for $3.96, which lines up perfectly with that right there. Unfortunately, we're down below the 200 moving average. We got a down sloping 200 moving average, kind of decreased volume, so that's not good. I think the share price is probably going to get washed out. I might actually move this down slightly to try to get it a little bit cheaper. We shall see. And Pado down 4.3% for the week. Both of these companies, Birchcliff and Pado, are slightly dilutive. They've increased their share count a little bit, which, if more shares are available, it's kind of like the dollar when they print. If they're printing shares, then it drives down the cost or the price of the share. So down below the 200-day moving average. Got a stink bid down here, which is probably a complete pipe dream. I should probably move that up somewhere around like $9.25. And coal, we've got Matt Warder, our resident coal expert, is coming back on the show. It was going to be today, Friday, but Matt had to catch a plane, and that would make for a terrible episode. So we're going to record on Monday. So put your questions in the submit questions for Matt Warder under the community tab in that post, and we will pick his brain and ask your questions of our coal expert. Thermal coal closed the week at 141. Met coal just completely fell out of bed. Now it's at 176. So Matt recently said that he believes the floor now, after running the numbers, is probably around 160 for met coal. So we could still see a little bit more downside. Coal ETF is down 10.6% for the week, 9.5 million shares. So 9.5 million assets under management with the same amount of shares, 470,000. So money is moving out of this, which is not fantastic. We'll find out from Matt what he thinks on Monday. Glencore, same kind of thing, down 8.9%. $9 is, I think, the next support, maybe a little bit north of 9, maybe like 9.25, somewhere in that range, but it does look like it's going lower. They did just pay a dividend, although it's paltry. AMR continues to just get hammered, now down below $200. It's down 17.6% for the week. If we got more downside in met coal, then I could see AMR maybe getting filled back here around 170 or so, maybe even like 160. Warrior met coal also down 14.2% for the week. We've got some support right now on this 400-day moving average. RSI is pretty low, 30. And in the weekly, lining up, see like this back support right back here. We got a little bit of support here on the 100 weekly moving average, which is a couple dollars lower than we are now. And Peabody. So this one's been kind of fun for trading, basically buying it at, like 21 or 21.50 and then selling it around 23 or 24. I think we're getting a moment in time here. If we get a little more weakness in coal, this one will probably get hit a little bit lower, but you might be able to run that trade again and pick it up around $20.50, something like that. Platinum down 1.5% for the week. Okay, it's below this rising 200-day moving average, but still like support around like 860, somewhere around there. As far as how to play that, PPLT is the easy stock market way to play it. Still same number, $79, $80, $81 for an entry into this. Palladium is down 6.5%. We got support around this white line around 860 as far as I see it, maybe a stink bid down here around 830 or so. and translating that over to PALL, the platinum ETF, that equates to about $79, $80. SPPP getting into the buy zone. I'd like to see it come back down here to like $8.75 again. I think that'd be a pretty sweet entry point. RSI is still kind of middle of the road. We want to see this sell off a little bit more. And platinum divided by silver is incredibly cheap. It is 32 ounces of silver for 1 ounce of platinum. Nickel futures is falling out of bed again, 15,600. And our favorite nickel ETF, NIKL, I think a limit order right back here following this at $11.30 would be an interesting entry point. Remember, these guys pay a pretty incredible dividend. RSI is at 32. Centaurus Metals is down 7.2% for the week. I'm not getting any more of this. I'm happy with my position. Just basically waiting on them to get funding and start building out their project in Brazil. Okay, Cobalt. All right, we talked about this a couple of weeks ago. Member of the Hive, CR, found this, and I was asking you guys, we need to find a way to bet this. So put it in your coal companies. Had a lot of you write in. Tile Brick says, Cobalt is being designed out of EV batteries. Might be worth something, but is now unpredictable. So if that's the case, that might kind of negate some of our bet. But here's some of the cobalt companies that you guys brought up. These seem to track the price of the commodity pretty well. So we got Cobalt Blue, and then we've got, I'm sure I'm mispronouncing this, Jervois Global Limited. Okay, all of these kind of look like a dying heartbeat, which is exactly what we want. Another one here that's kind of coming into a double bottom, Ardea Resource Limited. And then also Meteoric Resources, which Rick Rule has talked about. Now, all of these, so thank you, Ega Beaver, for putting these up here. I appreciate it. Cobalt Blue has a $20 million market cap. It's out of Australia. It's not making any money, and it's diluting. Same goes for Jorvois, $20 million market cap. It's also not making money, and it's diluting. And then Artea is also not making money and diluting. And then we know that Meteoric, they're kind of at the stage where they got to do that because they have to raise money so that they can build this thing. I don't know. Is there any other cobalt companies? Maybe next time we have Rick on, we will ask him. But do you guys have any others, any that look decent? I mean, I'd like to play this. I mean, when I look at this cobalt chart, you know, it kind of reminds me of like lithium. You know, it's just totally lithium or nickel, I guess, you know, just totally down in the toilet. Is there a company that is at all profitable with this, or is there one that's losing money right now but's going to win the last man standing contest? Or does this really look like fundamentally we're not using nearly as much cobalt and it's probably going to go away? Well, not go away, but you know, not get any better. So love to hear you guys' opinion. Put them in the comments below. Iron ore also down, shocking, like everything else. Down to $91. It is down 9% for the week. One of the bigger iron ore miners is BHP, now getting really down here. So bought some more BHP at these low levels here. Liking this one a lot. They pay a great dividend. They got a dividend coming up, which is also September 13th. So if you get in now, it would be like buying the share price at $1.46 below where it is now, because you're going to get that dividend here shortly. Rio Tinto, same kind of thing, just falling down, you know, just getting whacked with the coming recession. We're going to need less copper, less iron ore if this recession actually plays out. And this is selling down, although the dividends on this one are fantastic, just like BHP. Some back support, you know, if you believe in the long-term thesis of commodities, this company should do very well. I think a buy around now is pretty good. And if you don't want to fuss with any of those and you just want to get the ETF, look at this: BHP, Rio Tinto, Freeport, and Glencore coming into a nice little double bottom here. Maybe we got a little bit more downside. RSI is 33. It could go lower. Next level of support for this is going to be kind of in this range down here, which would be a couple bucks lower than it is now. And Dave D asked about this one, which is Fortescue. This one's iron ore, and what compelled him to really look at this thing is check out the dividend here. So we look at the dividend, 12.25%. Dividends are kind of all over the place. They're semi-annual like BHP. I don't know. Do you guys know anything about this company? I'd be curious to get your opinion. Put it in the comments below. And Bitcoin, as of this moment on Friday, it is trading around 54,000. It's down about 6% for the week. One thing that is kind of concerning about this is, let me zoom in on this a little bit here and you guys can see what I'm talking about. So we're making lower highs basically, right? Which isn't exactly bullish. So back here in March, we got up to 74,000. Then the next one was 72,000. And then we got 71, and then we got 69,000. Then we got 64,000. I think over the next coming weeks, we're probably going to go a little bit lower on Bitcoin and then come up for a bounce. But I think it'll be lower than 64,000, creating lower highs. We shall see. Time will tell. Alrighty, well, I hope you guys got something out of that. Thank you for always being here. Be sure to submit your questions for Matt Warder in the community tab. For Cole, we're interviewing him tomorrow, Monday. And thank you for always being here. Be sure to support the show and share this with anyone that you think needs to hear it. It's probably your buddy that can't stop talking about tech stocks. You have yourself a great rest of the day, and we will talk to you next time.